Virus impact was seen on the earnings for 2020. Underlying losses expected to continue into the first half of this year. So what's the outlook for revenue performance as the business is rebuilt?
I think the first half of 2021 is clearly going to be another difficult period. The first quarter we expected to be tough, and it is proving tough. But I do hope in the second quarter to gradually be able to see an increment in revenues, and then I'm hopeful that in the second half we'll start to see real pickup. Not returning to the levels we might have seen in former years yet, but greater strength coming through. There's differentiation according to the markets, but more broadly, I think we'll have a better second half after losses in the first.
Returning to profitability may be challenging, and at the peak of the pandemic, only 25% of the properties were open. And at one point, if I recall an anecdote that you shared, there were 200 guests in total globally. How many hotels have yet to reopen as of now?
As of the moment, there are 2 hotels that haven't reopened from the peak period of the pandemic. But I'm glad to be able to say that we are expecting that both of those, Barcelona and New York, will reopen in the coming couple of weeks. In addition, we have a couple of hotels that are close to opening for the first time in the case of our property in Istanbul. But most excitingly, in April, we're looking forward to be completing the renovation and restoration of the Mandarin Oriental Ritz in Madrid, which will become a great, iconic hotel for the future.
China has bounced back largely due to domestic demand. Aside from that market, where else are you seeing signs of improving occupancy rates?
Right at the moment, improving, it would be difficult to say anywhere is strongly improving as of the first quarter. China has been stronger than many markets, and the other area in which we've seen greater strength has been in the resort properties, where people have continued to want to get away to warmer climes, to have a holiday, to have a rest. So where they've been permitted to do so, that's been possible. We've seen strong performance in Dubai. We saw very strong performance last summer in Bodrum in Turkey, which we would again expect to see in the coming months. And we had an excellent year, for instance, in Como in Italy. So I'm hopeful that in resort, in leisure-orientated destinations, as we move into the middle of the year and the summer in the Northern Hemisphere, we'll start to see stronger performance in many of our properties.
James, cost cuts, government relief helped cushion some of the impact in the second half. Under what conditions might there be the need for more cost-cutting or cash preservation measures?
Well, I think we've been fortunate in being supported by a number of governments in some of the more difficult markets for us during last year, and that continues, not in Hong Kong, sadly, but in most other markets, government support has continued for the hospitality industry, which has been helpful. We did take very early measures in order to manage costs, and sadly, it did mean us having to say goodbye to a number of colleagues, so our workforce has come down by some 23% since the beginning of 2020. I'm hopeful that we've now restructured and positioned the organisation to be able to robustly grow into the future. Clearly, one can't give any guarantees, but we have restructured much of the organisation, taken out costs in a variety of ways, and I believe now have a strong business together with a very strong balance sheet, which will enable us to see us through 2021, even if we face difficult conditions.
Now, on the balance sheet, the group has been largely conservative, but branching out into some investments, for example, with Stay One Deluxe, that's a peer-to-peer home luxury rental platform. Will there be more appetite for investments such as this, other sectors that provide interesting opportunities?
Stay One Degree, it was a very modest investment for us, but it's an indication of our desire to reach out a little bit beyond the 4 walls of the bricks and mortar of our properties, to be able to take the fan, Mandarin Oriental, to customers on a more regular day-to-day basis in the luxury segment. We also formed the alliance with Oberoi, O&MO Alliance, to be working together. And I do hope in the future that there will be further extensions that enable us to strengthen the positioning of the Mandarin Oriental fan brand and become more regularly relevant to our key guests around the world.
Can you give us more clues as to what other partnerships may be of interest to the Mandarin?
I can't be specific easily, but I think the key point to note is that obviously with only 34 hotels in different locations in the world, we can only be relevant to luxury consumers if we work within those properties on those occasions when people are travelling to those cities. And what I hope to be able to do through a variety of both alliances and extensions of the way we operate to bring our product, our food and beverage, our wellness facilities into the living rooms, the homes and the lives of more of our guests.
Now, the luxury market is a pillar for the group, the GCC, the Gulf, also increasingly important, Riyadh being checked off the list. Why Saudi?
It's opportunistic. The Al Faisaliya, which we've taken over the management of last week, is one of the great properties in the Middle East and one that we were very comfortable with the refurbishment that's taking place with Adam Tahani being a genuine premium luxury property. So to have the opportunity to take over a property like that, one of the leading couple of hotels in the city, and really make an impact in the Middle East, as we've done with new openings in Dubai, in Doha, in Abu Dhabi with the Emirates Palace, and we will have in the future with a second new property in Dubai and in Muscat, a strong positioning, I think, for that market, and particularly also for the outbound visitors from the Middle East.
Now, we've seen vaccination programs accelerate, particularly in the US and UK, whereas the EU has hit a stumbling block with its rollout of vaccines. Where are you seeing the quickest recovery, and how are you then positioning in the Americas as well as Europe?
Well, I think the key from the opening up and the vaccination programme is that whilst the EU may have been slower than one or two other countries, it is still progressing. And I think the most important thing from our point of view is to see a significant take-up in vaccinations so that we actually have real progress in governments in having confidence to be able to gradually relax the border controls that exist, because it's that and the measures against COVID that are really constraining from people being able to travel. So at the moment, we're not seeing the pickup coming yet, but it's in the second quarter that I hope that will come. In the US from the strong rollout, I still believe that we'll start to see happening that in the European Union. But what I'm most concerned to see is how long it'll be before we start to see reductions in the restrictions on movement that exist between territories and nations within Asia.
Here in Asia, Vietnam, you announced your second project just last month. In Thailand, there's a push to reopen to visitors by July. Here in Hong Kong, as many places, we're waiting for the vaccine passports and travel bubbles to become a reality. So how are you positioning for this recovery on this side of the world?
At the moment in Asia, our focus is very much on staycation business, and there my colleagues and team have done an incredible job pivoting away from international visitors, which would have made up 80–85% of our guests in most properties, to domestic visitors, flexing in terms of the revenue sources, staycations, the experiences that we bring to guests when they come and stay. And I think that will continue to be the predominance of revenue in 2021. And it's developing the experiences, creating new premises and facilities like the one we're sitting in terms of opportunities for people to visit and eat with us, that's key. And then beyond that, I hope we'll start to see more opening up to international visitors.
Speaking of the group's financial position, new facilities were added last month. Is there enough padding against this uncertainty?
We have a very strong balance sheet, I'm glad to say, which will robustly see us, our colleagues and the organisation through the downturn. I wouldn't like to be overly robust about it, but we have consumed quite a lot of cash. But before going into this pandemic, we had a balance sheet with very modest gearing and significant unutilised facilities. So I'm very confident for the future of Mandarin Oriental.